Good afternoon and welcome to the Hartford Definitions, Thresholds, and Appetite Training webinar hosted by Stuckey and Company. 2016, Stuckey and Company is celebrating our 25th year as an MGA, offering our agents access to solid A-rated carriers like the Hartford, Safeco, Travelers, and Chubb, to name a few. Just a little bit about who we are before we give the presentation over to Hartford. Stuckey and Company has 9 specialty insurance programs. Again, we've been in business 25 years. We're kind of proud of that. And we have 9,700 licensed agents across the country that represent us. And at last count, we had a couple 100,000 satisfied customers. As an MGA, we do everything really that an MGA does. So we literally will create the underwriting guidelines and the program ideas. We write it, quote it, bind it, issue the policies. We endorse the policies here. We work on the renewals, invoice, report it to the carriers, to the system integration, claims, marketing, and training. If there's any specific specialty programs that you guys have, we'd love to take a look at them and show you what we can do. Our 9 programs are these 8 plus 1 for mobile devices. But the first one is the Safety Tech program. It's a technology professional liability program. Aspire A&Es for architects and engineers. Harbor Guard is the program we were founded on for marinas and boat dealerships. We do miscellaneous professional liability, green energy insurance, personal lines, which is home, auto, boat, and high-value home, commercial lines, which is a little bit about what we're going to talk about today, BOP, comp, auto, bonds, E&O, D&O, EPLI, and surplus lines. So if it falls outside of the commercial line side, we also have a surplus lines department. Next, I'd like to thank Tracy Hagee-Kelly, the Select Customer Service Rep for the Hartford, and Michelle Davis, the Training Director for the Hartford, for presenting and also making themselves available for questions during and after the webinar. A couple things: if you have a question, you can type it in over on the Go to Webinar column, the control panel, under the questions section. We will get to some questions and answers at the end of the presentation. If we don't get to it today during the presentation, we will definitely answer them by email or phone afterwards. One other thing, I will send a follow-up email out to everybody with a link to the recording of the webinar, our appetite guide, and a few videos and coverage analyzer tools that we can share with you that maybe you can share with your clients. So I'd like to go ahead and hand the presenter off to Michelle to go over the Hartford definitions and thresholds.
Wonderful, thank you, Dwight. Can you hear me okay before I get started?
Coming in loud and clear.
Great, perfect. I always like to double check. Well, welcome everybody. I am with Hartford's Agency Education and Consulting team, and I work with MGAs like Stuckey and agencies across the country delivering training around Hartford products and services. So I'm really thrilled to be going over today the Hartford Small Commercial definition, thresholds, and appetite. We're actually in the process of increasing our thresholds in small commercial so that we can write even larger, what we define as small commercial accounts. So same great appetite and product, but now we can write even larger small commercial accounts. So we'll make sure we cover that in our presentation today, as well as our appetite, in particular our top 10 industry segments in detail. So let's go ahead and dive in. So what we're going to cover today will include really understanding what small commercial means at the Hartford. And in addition, understanding our small commercial account thresholds by industry. So we'll cover those. And as I had mentioned, we are in the process of increasing those to larger accounts with Hartford. And then recognizing key industry segments that Hartford would like to write so that you have more success with targeting business out there. So each carrier really defines small commercial in different ways. Some choose to define small commercial as size of premium, but not at Hartford. We actually define small commercial by our thresholds. So when you think about it, small commercial at the Hartford does not necessarily mean small premium or small revenue for your agency. Many small commercial accounts we write are actually in the 6 figures in premium simply because they fit our threshold for small commercial. So typically accounts 75 and below fall into our definition of small commercial, and the accounts that range between 10 to 25 are really our sweet spot for larger premiums. So let's take a closer look. So when we're looking at spectrum, GL is based on sales per location, and property is based on property values per location. And we'll go over these in detail in the next slide. Our workers' comp is based on payroll per account, and for commercial auto, it's based on power units on a policy. So let's go over our small commercial thresholds. So you can see on this slide on the screen, we've got a list of all of our industries, and then our spectrum, property value, and our sales values, our thresholds in spectrum, and then workers' comp, our payroll thresholds. So just looking at the industry segments, starting with the very first one, business and professional services, medical offices, we can actually go up to 20 million per location in property value, 40 million per policy. And for sales, we can go up to 20 per location, 30 million per policy. And for workers' comp, for business services and professional services, we can go up to 12 million in payroll. And this has increased from what it used to be, which was 9. Retail, we can go up to 15 million per location for property value, 30 million per policy for property value, again for property. For sales, we can go up to 15 million per location and 30 million per policy. And for retail, we can go up to, on our workers' comp, payroll up to 6 million. Financial services is another big area for us. So again, you can see we can go up to 20 million per location for property values, 40 million per account. For sales, we can go up to 25 million per location, 40 million per policy. And for payroll for workers' comp and our financial services, we can go up to 15 million in payroll. So hopefully you're starting to get a sense that when it comes to Hartford and small commercial, it's not just those small $1,500 BOPs that we're writing. We're writing a lot of, $70,000 accounts and onwards up to 6 figures. Contractors is another big area for us, and you can see we can go up to property value and sales of 15 million per location, 20 million per policy, and for payroll for workers' comp, we can go up to 1.25 million. Manufacturers, technology, you can see all of these limits here. So for technology, for example, we can go up to 20 million per location for property values, 30 million in sales. 30 million in property value per policy. For our sales, for our spectrum, we can go up to, for technology risk, 10 million per location, 15 million per policy. And for technology, we can go up to 15 million in payroll for workers' comp. And then you can see all other industries. This is including our wholesalers and our restaurants at the bottom of the screen. We can go up to 10 million per location for property values, 15 million per policy, and for sales. For GL, we can go to 15 million per location, 15 million per policy. And for all other operations that are not listed in these industry segments, including wholesalers and restaurants, on workers' comp, we can go up to $5 million in payroll. So when it comes to auto, we can do up to 25 power units on a policy. But keep in mind, if you are writing the spectrum and the workers' comp, all three lines with us, we can often write more than that and work with our middle market team to get larger auto risks out for you as well too. So again, while we write a lot of smaller size accounts, because of our thresholds and the way that we've increased them, we're writing even larger accounts. So what like? Take a look at this slide and you will see our top 10 industry segments. And these include business and personal services. So this can be anything from, your hair salon to a business consultant. Finance and insurance is another big area for us as well. This can be anything from like an estate planner to your own insurance agency. Professional services is another big area for us. So this is going to be like your white-collar accountant, lawyer. We write a lot in the medical outpatient healthcare area, so any of your large doctor's offices or even a small chiropractor we'd be able to handle for you. Technology is another one of our key traditional targeted industries. In fact, we can add E&O coverage right onto our BOP for technology, which is a huge benefit for our clients. We write so much technology that we actually have a separate technology team of underwriters behind us as well too. So this could be anything from a small custom computer programmer to a large component tech manufacturer. And then we have our 6 expanded target industries that you can see here on the right. And these include our contractors. And when I say contractors, I'm really talking artisans, specialty trade contractors. So this could be anything from a landscaper, electrician, floor installation, HVAC, plumber. Another big area for us is real estate and lesser's risk. So real estate, that could be anything from an actual real estate agency to an appraiser. Lesser's risk, a lot of carriers have really gotten out of lesser's risk over the last 3 or 4 years because of losses, and we certainly had our time period with that as well too. But we've really kind of honed in on our definition for lesser's risk, and where we're most successful is typically the professional office space and your strip malls. A good rule of thumb for us is if we would be able to write the tenants on a BOP, we would typically be able to write the lesser's risk. Manufacturers is another big area for us. So this could be anything from metal goods manufacturers, CNC shops, soft good manufacturers, food manufacturers. Restaurants is another big area for us. So this could be anything from a little fine dining restaurant to a little deli or coffee house. And while we write restaurants, we do not write bars. And what I mean by that is a bar being a place that has live entertainment that you would typically go to for cocktails, and their primary operations isn't really servicing food. Okay, if a restaurant has a bar in it, but if it's primarily what you consider a bar to go out for the evening after hours, we wouldn't be a market for it. Retail is another big area for us. So this is a lot of your Main Street business, whether it's a women's apparel store, a sporting goods store, a candy store. Wholesalers is another expanded targeted industry segment for us. So, for example, we write a lot of sporting goods stores, so we would write sporting goods wholesalers as well too. So these are our key top 10 industry segments. We're very friendly when it comes to startups as well. There's really only 3 lines that we look for at least 3 years in business. And that's going to be our contractors, our restaurants, and our nonprofits. And if you think about it, those industries make some sense because those are the ones in the first couple years are going to be most volatile. We also are very friendly when it comes to writing monoline. We would like to write the account business, but we know that's not always the case. So we could write monoline property, monoline liability, monoline workers' comp, or even monoline auto. So for example, on our contractors, we typically don't write general liability for your GCs, but we would be able to write monoline auto. We typically wouldn't write GL for a roofer, but we would be able to write monoline auto. Now do keep in mind there are some state specifics on all of these as well too. So for example, we wouldn't be able to write property in Florida or in New Orleans, for example. Now in 2014, we were the largest writer of small commercial in the country, but there are some things that we don't write that I like to cover. So we're not going to be a market for your habitational business. We're not going to be a market for your 24-hour exposures, gas stations or grocery stores. We're not going to be a market for auto dealer or auto repair. We're not going to be a market for transportation risks, so long-haul truckers or taxi cab drivers. We're not going to be a market for those high-hazard risks in which someone is working too high or too deep. And so what I mean by that is while we would be a market for someone, for example, who installs cable in the first couple feet of the ground, we wouldn't be a market for an excavator. While we would be able to write certain lines of business for someone who, say, paints in the first couple stories of a building, we wouldn't be a market for your window washer. So hopefully that covers kind of what we would like to write. Here are our top 10 industry segments and some of the things that we wouldn't write. So, start thinking about the things that are coming through your agency and take a look at the next 5 small commercial accounts with Hartford and see where we're coming in. And then take a look at your upcoming renewals on, the things that we talked about today that are going to be a fit for Hartford. We've covered a lot of industry segments. We have over 880 classes of business. So think about Hartford first on these key industry segments that we just highlighted. So hopefully now you have really better understanding of what small commercial means at the Hartford. In addition, understanding our small commercial account thresholds by industry. And then, of course, our key targeted industry segments at Hartford and what we would like to write with your agency. With that, I'm going to throw it back over to Dwight, and we're going to open it back up for Q&A.
Yeah, thank you, Michelle. That was awesome, and it was thought-invoking also. We have a ton of questions. I don't know if we'll get to them all. I guess one of the first questions we had a few times, are the slides going to be available? I'll send out a follow-up email with not the slides, but I guess a link to the recording of the webinar. It'll only be accessible by the people on the webinar. One of the questions again that we got multiple times is, can we write property in Florida? And then we had another one, can we write property in South Florida? Can we write a package in Florida? And I guess I'll go ahead and answer it, and if you guys want to jump in too. We cannot write property in Florida.
At all.
Literally at all. Now we can take it out of the admitted markets and go to Circle Science markets, and we can quote the package including property in Florida, but it's excluding wind. So we still have the same restrictions that you would expect a standard national carrier to have in the state of Florida. There's also, here's another question, can we write GL standalone in Florida? And yes, we can write a monoline GL, and in fact, we can write monoline auto.
Monoline work comp.
And monoline workers' comp, that's right. So let's see here. Another one is, can we write contractors in New York? Taking some of the tough questions. We have some of the same issues that you expect, and probably the reason you ask the question. Contractors in the boroughs are difficult. Sometimes we can write them, but if they're a difficult class, we certainly cannot. There are some height restrictions, and there's some years in business restrictions. If we can't write those those tougher risks are what are today and these days, considered a tough risk in, in New York and on contractors. We can place it with our surplus lines market, and they can quote it. Michelle, I have one here. Does the BOP include EPLI and cyber right off the bat? Does it include it within the policy form?
Yeah, so actually on our standard BOP, and every one of our BOPs, we include 10,000 in coverage and EPLI coverage for most states. And you can actually increase it up to $1 million. And then cyber is such a term that's kind of thrown around so much. So a lot of people, when they say cyber, they mean data breach. And we do offer optional to add data breach. We include not only first party. Once you add first party, you can add then third party. And not all carriers offer third party. We can go up to 100,000 for our first party. Which includes, notification, credit monitoring, even some good faith advertising in there. And then our third party, is that defense and liability piece, and actually probably the more important piece, because unfortunately, anytime one of these breaches occur, there typically is a lawsuit that follows as well. So we can go up to $500,000, which is a really good limit within small. I would challenge you guys to look at other carriers out there, and you'll find that our limits are pretty high. In addition, we do have standalone cyber policies that we could do within our Hartford offering outside of small commercial as well.
Okay, thanks. Yeah, another one we've been getting kind of, quite a few questions on, and some of you may have attended our restaurant webinar just 2 weeks ago, I guess. But it's whether there are limitations on the amount of alcohol sales or liquor sales, whether you'll write a restaurant or not. And I don't have those. Yeah, I don't have those percentages right off here. You know what? Here, I do have those percentages.
Actually, Dwight, I know them. If not, so if you got them, okay, go ahead and do them.
You go ahead and take the question, I guess.
Oh, okay. I can take the question. No problem. So when it comes to restaurants, we can actually write any percentage of liquor. It's just which ones can we write liquor liability on. So for a restaurant, we consider fine dining anything that has over an average price of $25 per entree. And for those risks, we can write up to 40% liquor sales and include liquor liability. Anything over that, we wouldn't be able to write liquor liability on, but we would still be able to write the account. For what's defined more as kind of your full service restaurants, we would be able to write liquor liability up to 25% of liquor sales. Anything over that, while we would be able to write the account, we wouldn't be able to write the liquor liability. Make sense?
It definitely does. I have a liquor kind of a sales sheet and underwriting guide.
The expanded guidelines.
Yeah, the expanded guidelines. It'll go over some of that too. I'll maybe I can attach that to our follow-up. Just a couple more questions to be respectful on time. I guess first there's a couple questions. Can we write limos? Unfortunately, we cannot write limos. I think Hartford used to have a limo program, but they don't have that anymore. That's probably, I think that was discontinued probably 5-6 years ago or something like that, it seems like. Home health care, we cannot write home health. But there's a couple questions about years in business for contractors, restaurants, and some nonprofits. A lot of the times carriers will let you slide with years just experience. Hartford, on the other hand, is really looking for the number of years in business. So we have some other carriers in the office that will write, businesses that are newer than 3 years in business, but Hartford is not one of those. And I guess one other question.
There are just a couple exceptions to it, just so that you guys know. For example, while, contractors, restaurants, and nonprofits, we need 3 years in business, there's a couple exceptions. One is for our franchise businesses that are restaurants, we will waive that 3 years in business. Or if there's a conversation around, maybe they have 3 other restaurants and this is their 4th restaurant that they're opening and they have some experience, that may be a conversation with, Stuckey, with our underwriters that we could talk through. And then for contractors, we write so many landscapers and electricians that if they have previous management experience, we will actually waive those 3 years in business. But otherwise, Dwight is right. We do look for that 3 years in business as a pretty standard rule.
Okay, well, thank you. Thanks.
Also, restaurant work comp. Brand new in business, we can quote the comp.
Right on. Yeah, so the workers' comp doesn't necessarily fall within those 3-year guidelines. And then I guess there's one more question that I'll take, and then we have a ton of questions. There's a question that is very timely. Can we write a landscaper that also does some snow plowing?
Small percentage, up to like 10%.
Yep, and that is we can write it up to about 10% of the overall sales. So, Michelle, I really appreciate your time. Thank you. I really appreciate all that you do, all that Tracy Hagee does for us. Hartford is a big part of Stuckey and Company and what we do and who we are. We have a lot of great webinars coming up. We have a Safe Code Collector Car webinar that's terrific, great presenter. These are all kind of quick webinars like this. We have a product recall webinar with Chubb coming up. And then we have a really good sales training guy that's going to help us with speaking your client's language. Hope that helps our agents. And then we have some auto differentiators. The next Hartford webinar is on the 22nd of March, and it's what differentiates Hartford's auto product from others. So we're really looking forward to some of those. Thank you all for attending, and thank you, Tracy Hagee and Michelle Davis, for presenting today.
Oh, thank you, Dwight.